Welcome to the midweek market update where I do a technical analysis and give you my thoughts on SPY, the Qs, and IWM. We have some earnings to talk about, we have FOMC to talk about, and as always, I've got about 5 trade ideas for you at the end of the video, so stay tuned. Jumping right into our S&P analysis, starting off with the sectors as we always do. Who was leading, who was losing, and where was the weight? So XLE energy sector leading the pack today, up about 3.5%. XLK, the tech sector, and coincidentally our heaviest weighted sector, down to the tune of 0.93, so almost 1% to the downside there in tech. Our next heaviest weighted sector, as we know, is the XLF for financials here, up in the green section of our sector split up top, up about 0.4, and then we'll go one more as well. XLV we know down 0.3, and we'll even go one more as well. XLY, probably the fourth heaviest weight consumer discretionary, pretty much flat at about minus 0.12% here. So overall sectors are pretty split as they stand right about now. We'll just check in on some of these charts to ensure that none of them are posing more risk than any others. And as always, XLK, sure, it backed off a little bit, but you have to attribute that to a pretty large and sizable gap down in Microsoft. Obviously, we had Tesla earlier on in the week, which backed off and is still moving lower. And Google, although it did gap up today, it sold off into the end of the day, which could have attributed to some of the move lower here in the XLK tech sector. So not a whole lot of risk. We have obviously Facebook and Apple, which just reported, and those are both gap ups as they sit right now. So we'll see if that sort of rebounds the XLK tech sector higher into tomorrow. But again, it's still early. They could do anything before the bell. XLF, financials for our next sector, holding, nice gap up, held, and nothing overly bearish about this. Obviously, the green one on the day will go to XLV, and as we determined in last week's video, we sort of talked about starting to feel a little bit ready for a pullback, and that's the pullback we're starting to see. So no concerns there. Looks healthy in an overall uptrend. And we'll go to the XLY, the consumer discretionary, which we talked about. Fourth heaviest weight, just about. And look at this, nice little pressure cooker top there. If we can take that area out and again make a new high, I think things look fine, right? We have lows, continual higher lows. We just need to set a new higher high to continue this nice little uptrend that we're on. Even if we consolidate sideways, again, I think the market's been pretty boring, although we've had some pretty significant events happen this week. Let's move back over to the SPY chart and talk about some of our levels that are actually going to be tradable. If we could get that chart loaded up, there we go. There's nothing really to mention in the VIX and the bonds, which is why we're not going to bring them up today in this week's episode. But if we zoom in on today's action, or this week rather, you'll notice it's essentially flat, right? We really have not done anything these entire 3 days of trading. Started to peek our heads up above with some of that FOMC volatility, but really didn't find any traction, could not hold it, and just failed right back down into a 2-day range. So in terms of our levels, everything is kind of status quo. Treat this as now a 3-day balance, even a 4-day if you want to consider the end of Friday's session here part of the balance. We'll look at that on the market profile in just a bit, but obviously blue sky territories to the upside if we can take out that 419, and only looking for shorts if we break down lower out of this balance area, which again we'll define more clearly on the market profile. But on SPY, it's under around that 416 mark to trade down towards 413.50, and then obviously 410.50 is our sort of line in the sand. Underneath that, again, we're going to expect some more liquidation breaks to probably come all the way back down and at least test our gap. But as the market sits right now, just holding up here, not really anticipating that anytime soon. Let's go ahead and move over to our internals. If you're not familiar with this screen, get familiar. Top right-hand corner, there is a video which will tell you what this is, what it all means, and how you can set it up. What I want to point out here is, simply how flat everything really is. We always talk about really, muted reads here in the volume if we're underneath that 300 million. And you can see that on Monday, we just barely cracked that 250. Everything else has been much lower. Notably on Tuesday, just did absolutely nothing here in the volume read. Same thing with the ADDs. Tuesday, notably choppy there, did nothing. Even on today's FOMC sort of spike in volatility, the advanced decliners weren't doing anything. I will say, though, that each, every day so far has been positive, so that is sort of noteworthy. And I'm not saying positive isn't a good thing. I'm saying positive isn't literally above the zero line. So that's one sort of thing for the bulls there. Next up, we'll check in on the tick lower left, the sort of most important and more used for intraday trading. But you'll notice very, very compressed there. there on Monday, didn't do anything. Same sort of deal here on Tuesday even. Some lower reads getting down into the more extreme levels, minus 800, but really no slams, if you will. And we're going to write off today's action. Obviously, this is all attributed to the FOMC volatility, algorithms reacting to what Chairman Powell says. And if we just take a look at our futures, we can obviously look at this intraday a little bit. Today's action here, all across the board. At first it was down, then it was up, then it was back down, then it was back up. I mean, it's essentially just gone flat. And the easiest way to visualize this is just check out the white line here. That's the 20 simple moving average, and the blue line is the 50. They're going sideways, right? They haven't made any progress. They're not trending in any direction. Even the 200 SMA coming into today is flat, right? There's really nothing going on. All of the moving averages are nestled sort of right here in the middle of today's range, which again is just pointing to sideways. The market's sort of undecided, even after we've had some pretty serious announcements both from the Fed and, as we just discussed, with some earnings across Microsoft, Google, Facebook, Apple, all those big players that we usually look at. Let's take a look at the market profile. And again, this is going to help us define the balance area that I was talking about. But the areas of value are pretty much what we want to look at. And those are the yellow shaded areas on the little volume profile. So from here to here, from here to here, so on and so forth. You get the point. And basically why I was bringing up the latter half of Friday is, of course, if we look at where those yellow shaded areas are, I would say the majority of them sort of fall within, let's even bump it up, probably somewhere in here in that area. I mean, if you look over here, shaded area, this is regular trading hours, regular trading hours, regular trading hours, so on and so forth. I would say the balance that we most likely want to pay them, put the most emphasis into is somewhere around 41.75 on the low end, and to the high end, obviously we broke out a little bit today, but it's really at 41.85. So about a 10-point range worth of balance there that we've just consolidated in for now 1, 2, 3, and again 4 if you want to count the upper end of Friday's distribution there. So in terms of market profile, it's helping us see where the value's at. You can see the point of control, which is the yellow highlighted line, essentially has not changed very much over the past 1, 2, 3, 4, 5, 6, 7, I'd call it 6 or 7 sessions, right? They're pretty much all on par with this 41.82 mark. So that's going to act as a magnet unless we break upwards or downwards out of that balance area that we just talked about. There is a nice period of excess here in K period on today's upper end of the profile, and there are some excess prints here at the bottom during J. Same thing in this profile here, nice excess on either side. So it's not like there's any structural deficiencies that we can see very clearly as of right now in terms of poor lows and poor highs. One thing I want to point out is if we do decide to break lower, if the markets break lower down and out of this balance, so underneath that 41.75-ish area, you're probably also going to want to pay attention to obviously this low here, this low here. But if we do go lower, please be aware of these single prints down below in Friday's profile. I would just classify them from underneath 41.60. There's, again, very little structure. You can tell by the C prints, single there and single during A here, all the way down to about 41.32. So very poor structure there. If we do go down, expect there to be some ease of movement all the way down towards the bottom there again, because this is poor structure. That's going to wrap up the market profile section. Let's finish up the broad market here with the Qs. We'll move over there, back to here, and let's zoom in a little bit. And this one's slightly different. Obviously, we talked about Apple and Facebook earnings both being positive. So whether or not that'll sort of pull this back higher into tomorrow, I'm not entirely sure yet. You can see the Qs are trading at about 340 right now. So right in this general area. If we go higher, obviously you're just looking for this area to break. Let's put a value to it at around 342.25 to move into blue sky territories. If there is some sort of rollover and, by the time the bell rolls around, Facebook and Apple are lower, you're looking to take out today's low to essentially move to the bottom end of this overall balance here to 334.03. We've talked about that level in the weekly watch list there on Sunday. Anything underneath, you're looking at 329.50 as poor structure. Expect liquidation break underneath, but there is, the potential for getting into that support trend line if there were to be some sort of sell here. So be aware of that if something does develop. But as things sit right now, again, it sort of just looks like sideways is the most likely direction into the end of the week. If it does does go lower or higher, you have both areas mapped out. Again, we're looking for a breakout of that balance that we just discussed in depth on the market profile. Lastly, we'll check in on IWM Russell 2000 and our small caps, and these actually look a little bit more bullish simply because we're holding a 3-day balance now above this prior area of consolidation that we were stuck in. Remember, in the weekly watch list on Sunday, we discussed the break of this resistance trend line here, and it's holding, so that is all well and good for the bulls here. Anything over 230, and you're just looking for a run up to the all-time high, essentially up around 234, to catch up with the rest of our major indexes. Obviously, if it breaks, stumbling there, if it breaks back down underneath 227, the whole dollar, you're just looking for it to come back down into the range. I would probably target the 50 SMA here, which is hanging out around 223.10 as it sits right now. To the downside, probably not favoring shorts. Again, it looks more bullish, holding those 3 days of consolidation up and above. Let's move into the trade ideas for the week now. The first one is going to be on ADBE for Adobe. And this is one that I love to hold. I've probably talked about it on the channel in the past. I do hold it in a long-term account, but it's setting up nicely for a potential day trade opportunity here. Obviously, a clear bull flag, and if we break out probably over this area, 520, there's a little bit of a resistance trend line you could draw in to signal your entry. If we do something like this, there you go. Anything over that, obviously first target's here at 525, and then monitor for continuation higher. Looks like the next major area of resistance would be the all-time high, sort of up here around 533 to 536, depending on how you want to call it, which high you ultimately want to use. Next one is on another setup with the letter A, ADSK for Autodesk, and this one is pressing up against its resistance trend line, so it's not quite a bull flag, but if we do something like this, you'll notice, you touch the same area so many times, and especially in a frequent proximity, so talking about time here, it's only a matter of time before that essentially breaks, and with the hammer that's printed today, even as the market sort of went sideways and ended slightly lower or flat, this looks good to me to potentially take out the resistance trend line and move higher. Again, first target on a day trade is probably up to about 305. After that, you're looking at these highs in here. Let's put a value to them, up around 310 the whole dollar. Let's move next into LULU for the yoga pants. Lululemon, Lulumelon. I always tend to say that one wrong, but again, nice bull flag forming here, and what's most important about this particular setup is the fact that it's holding on to the 200 SMA, and we're consolidating just below another area of resistance from in the past. So if we can take it out, I would expect a sizable break here, again, just because holding the 200, previous resistance. If we can take it, we're looking at a move up to about 357, 360 if you want to round it to a whole number. Next target would be up above around 373, and that's the bull flag there. Obviously, you're not going to take an entry if we violate that 200 SMA and start printing and accepting below it. That would be your trigger to get out of the position if you enter early before the potential break. Next one is MCK for McKinsey, and this guy is actually a bullish setup as well for the reason that we have a test of prior market structure, right? If we do something like this, we clearly have prior resistance, a number of touches in here, turns to support, small little hammer, but what's the kicker? Obviously, the 50 SMA, the blue line there, is going to bring this into a super support zone. So looking for a little bit of a dead cat bounce after this little sell-off. Obviously, we have a double top here. So if we do break this with some strength early on in the coming days, be it Thursday or Friday, you're not going to want to fight it. But if we start to see any bullish patterns form, we see a bull flag form in the first 5 minutes of the day, that would be your signal that we could see the dead cat bounce for the day, and you could take that trade there. Lastly, we're going to bring it over to pins, and this is sort of a bottom fishing play. Obviously, we had earnings, and it gave us a large gap down, sizable gap down there, and we sold, but where did we sell into? Obviously, this very historic area of support right around $65.50. So look at all of these touches, strong reactions out of it. Again, you can see from this experience here and this one here, in the past, it has violated it with some, lower wicks, so be aware of that it could, potentially not bottom out fully here at 65, but I'm on high alert for potential reversal, intraday patterns to form and start looking for upward action to develop. Obviously, the gap fill would be nice, but that's a pretty large target to the upside, not expecting it to happen immediately, in 1 day, 2 days, even a week per se. Could take some time to fill that gap up above, but it's over 70, fills up to about $76, and the 50 SMA, as it continues to move lower, will provide provide a little resistance in that area as well. So that's going to wrap up this week's episode of the Midweek Market Update. If you enjoyed the video or learned anything new about the markets, if you enjoyed any piece of the analysis there, be it the sectors, the broad market, the internals, the market profile, you name it, let me know down below in the comments, or simply leave the video a thumbs up. That being said, I wish you all a green rest of the trading week, and I hope to see you on Sunday in the weekly watch list.